Good morning, everybody. It's Monday, July 1st. Welcome to a new month, 5:26 a.m. Central Time. December corn futures down 1 3/4 at 4.19. November soybeans down 1 at 11.03. December Chicago wheat up 1/4 cent at 5.97 1/4. December Kansas City wheat down 2 at 6.01 1/4. December spring wheat down 1/2 cent at 6.32. Let's start off with the report.
So corn futures fell sharply following a bearish USDA report on Friday. USDA pegged 2024 U.S. corn acreage at 91.5 million compared to the average trade guess of 90.3 million and March intentions of 90 million. The acreage numbers were based primarily on farmer surveys conducted during the first 2 weeks of June and included approximately 64,000 farm operators. In addition to the bearish acreage number, corn stocks as of June 1st were 120 million bushels larger than expected. The December 2024 corn contract lost 13 cents to close near 421 per bushel.
The corn numbers were the big bearish surprise on Friday. The soybean numbers weren't overly surprising. Neither were the wheat numbers. Let's look at acreage. So corn acreage came in at 91.48 for corn, and that was sharply higher than March intentions. I was wrong. I thought the market had something close to this priced in, and clearly it did not because futures totally fell out of bed, partially because of this, partially because of the stocks numbers. But this acreage number alone, if you're to assume a 181 bushel per acre national yield, the acreage number alone adds 235 million bushels to the supply side of the corn balance sheet. You then take the stocks number, which were also larger than expected for corn. It adds another 80 million bushels ballpark. So USDA added basically to the supply side of the U.S. corn balance sheet more than 300 million bushels, and that between stocks and acreage. So it was bearish on both fronts, and that's why this was seen as being so bearish. The soybean acreage number was actually a little bit lower than expected. Wheat acreage was a little bit lower than expected. June 1 stocks are interesting, and there's an overriding theme here when it comes to corn and soybeans. You look at the breakdown. The on-farm stocks of corn and soybeans were up sharply versus the same period last year. June 1, on-farm corn stocks were up 36.5% versus the same period last year, where off-farm stocks were up only 4.3%. On-farm soybean stocks were up 44.5% versus the same period last year, while off-farm stocks were up only 6.4%. So the theme here is much bigger farmer ownership in all likelihood than we had last year. And there've been some questions about that. We've talked at length about how the farmers undersold and that sort of thing. And it would appear as if that's the case. And we did have big crops last year. We had a record corn crop last year, big soybean crop last year. So yeah, stocks are supposed to be up, but this divergence between off-farm and on-farm is especially interesting. The wheat stocks numbers are a little bit different. The off-farm stocks were up by a greater percentage than on-farm. I'm not going to read too much into that because we're on a different marketing year timeline. But make no mistake here, based on the surveys, and it's all survey-based stuff, vast majority of it, 64,000 farmers, telling you that, yeah, stocks are up on the farm drastically versus the same period last year. Let's get to these technical difficulties.
So the report was delayed due to those technical difficulties you just mentioned. The official USDA website was at least 10 minutes late. Heavy traffic likely caused the USDA servers to overload. USDA releases the data in a few different places. NASS claims that QuickStats and JSON were on time, but that the official website was severely delayed. This is not the first time that USDA has experienced such issues, although the delays on Friday may have been the largest that we've seen.
Yeah, this was the worst. This was the worst delay that I've seen because the official USDA website, I was sitting there 8 or 9 minutes after the report and still couldn't get on it. And I suppose if you went to Quick Stats, if you were smart enough to say, let me check in the other places, maybe you could have found it if you would have punched in all your criteria. This JSON thing is interesting. So this is like data that's delivered via API. And I suppose if you're a farmer and you want to hire a coder, you could have got the information on time. Was there something nefarious here? Was USDA doing something wrong or purposeful? No, they weren't. NASS is a group of statisticians. They're not market people. They're statisticians, and their servers crashed because there was too much traffic. So it's their fault, but it's not their fault. They don't understand how big of a deal this is for the markets. That's what they don't understand. They understand the statistics. They do the surveys, but they're not market people. The market people are the CME group. And what does CME group want? CME group wants the markets to be open when the reports are released so that they can achieve maximum trading volume and maximum profits. Guess what, guys? The CME is a publicly traded company. They're not here for you. They're not here for me. They're here for the shareholder. And for the shareholder, they want maximum volume. So in a perfect world, USDA would say, you know what? We really screwed up here. And we've screwed up several times in the past. And we're going to go and change our release schedule. If it was up to me, the reports would be released when the markets are closed. CME could quickly come back and just change their schedule and say, oh, if you're going to release them at 8 a.m. Central, we're going to make the markets open at 8 a.m. Central. You could see some back and forth. So I don't know. This was especially frustrating for me. I feel like because of the way it was released, like if you were dialed into the API here and you're an algo or you're a black box, yeah, you probably got the information way before farmers did or before I did. And are you ever going to beat the black boxes and algorithms? No, you're not. That's why I think they should be just released when the market's closed and let everybody look at them at the same time, give everybody a few minutes to digest. But no, there wasn't anything like nefarious going on here. I don't think. I think USDA they have servers that need to be updated and they don't understand how markets work. That's my thought.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you talk about some of our recent premium videos?
Report day is a good day to be a premium subscriber. I blasted out a USDA snapshot with a balance sheet rundown and some of the implications. I think it was out within 18 minutes of the release, or at the supposed release. I actually had it out within 8 minutes of the release, I think. Jim was on Thursday last week. I did some macro stuff. Pete Meyer's going to be on today, and we're going to do an in-depth kind of deep dive into the report. We're going to answer mailbag questions that came in from subscribers about the report, everything from markets to marketing to USDA's processes, all that stuff. If you guys want to see the premium stuff, go to standardgrain.com. There's a new premium video every single business day. Our morning email goes out at 5 a.m. Central Time every single business day. This is the best way to support what we're doing and a great way to get a ton of great information that we don't show here publicly. I think publicly we put out maybe 40% of what we do. And the better stuff, the stuff that you need to see, the analysis, the cash grain recommendations, that's in the premium deal. So sign up today, guys. There's no other fee, no other obligation. Nobody will try to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes the 6 most recent premium videos.
Weekend rains fell across portions of the U.S. Corn Belt. Parts of Iowa, Minnesota, southern Wisconsin, and Michigan saw the highest amounts. Most of the eastern Corn Belt was dry, barring some areas of Indiana and Ohio. The forecast is wet. The 5-day Euro and GFS models are mostly in agreement regarding generalized Corn Belt rainfall during the next 5 days. Accumulation is likely to begin late Monday and into Tuesday. While rains during the next 5 days favor the west more heavily, the 5 to 10 day models offer more widespread Corn Belt rainfall. Temperatures are slated to run slightly below normal for most of the region during the next 5 days.
This time of year, the market takes a simplistic view of the weather. If there's rain in the forecast and it's widespread, as is pictured here, this is bearish to benign. Now, you can go more into the nitty gritty and say, you know what, we had flooding in the Western Corn Belt and the East was starting to dry out a little bit and maybe late planting has an impact on yield. Yeah, all of those things are possible. But for right now, it's very simple. And the simplistic view that the market is taking is that all is well and good because we've got a wet forecast here on the first day of July. And it's really not that complicated.
Fund traders have added to their net short in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending June 25th, the funds were net sellers of 87,000 contracts of corn. The net short of 296,000 corn contracts is the largest since mid-February. Funds were net sellers of 27,000 contracts of soybeans, and they were also net sellers of 14,000 contracts of SRW wheat on the week.
So remember, these numbers are accurate as of last Tuesday, prior to the report. The private groups are estimating that at Friday's close, the funds were net short 350,000 contracts of corn, and that would be a modern era record. The prior modern era record, going back to 2006, was 344,000 contracts net short in the corn market. That was in 2019. So we could be in a situation here where the funds are record short the corn market in real time, and we won't know that, of course, until Friday after the close. But no love for the grain markets here. We saw that little short covering event in May. Funds never really got long anything, and now they're back about as heavily short as they ever get across the 3 contracts that we track. Pretty ugly stuff.
Despite the disastrous debate that occurred last week, President Joe Biden has yet to discuss dropping out of the race. Biden joined his family at Camp David over the weekend to discuss the future of his reelection campaign. Top leaders such as Barack Obama and Bill Clinton continue to offer public support for Biden. However, several congressional Democrats have voiced concerns about Biden's ability to win the election. According to sources, the First Lady is the only person who is influencing Biden's decision to stay in or drop out of the race. Numerous individuals have been discussed to replace Biden, but there doesn't appear to be a clear choice. If he were to be replaced, it could trigger a conflict within the Democratic Party, allowing Trump to win the election.
Yeah, I don't know exactly what's going to happen here. The only reason we threw this in today was because of the tariff and trade agreement type stuff. So I don't know. I mean, following that debate, you got to think Trump's the heavy favorite to win, right? I mean, people just. I mean, if all of the if CNBC is telling you it was a disaster, or NBC, they're telling you it was a disaster, it was a disaster. And some of the stuff that we're hearing from sources in quotes, it's variable. Some people say he's going to drop out on Tuesday, and that's when the announcement's going to be. And other people are saying, no, he's not dropping out at all. I don't really know, but I think the likelihood of a Trump presidency is more probable now. And does that mean tariffs and trade wars? I don't know. I mean, I think we were going that way anyways, but that debate kind of, I'm not going to say it sealed the deal, but it doesn't look good for the Democrats. What did cattle do on Friday?
Cattle futures softened on Friday. Feeders were down an average of $1.72. Live cattle were down an average of 88 cents. Cash cattle trade was slow last week up here in Nebraska, and over in the Western Corn Belt, cattle traded at 198, which was steady with the prior week. We saw a few sales in Kansas and the Texas Panhandle at 188 to 190, which was also steady with the previous week. Box beef had a pretty great day on Friday. Choice ended the day at 326.32. That was up 2.99, and select ended the day at 304.50. That was up $1.80.
Outside markets to start a new month. U.S. dollars off a little bit. Stocks are just marginally higher. Bonds are off a full handle. Crude oil is up 45 cents, and the August WTI at 81.99. Have a great week, guys. We'll talk to you Tuesday.